Good evening, everyone, and welcome back to the part 2 IMR of 15th June 2018. Or if you're watching this recording later, good morning or good afternoon, and to wherever you are in whichever corner of the world. So, welcome back. And maybe I'm going to just make this part 2 IMR a little bit fast tracked because we found some, I think, really wonderful and mouth-watering setups in the previous part 1 IMR, and we'll just approach those directly and make it more efficient rather than go through each and every stock one by one in the Nifty list. So I'm just going to look at specific stocks today. Let me first start with following up on what we discussed in the part 2 last week, specifically, or rather 4 to 5 days back on Monday when we did the previous IMR, which is specifically the pharma stocks that we spoke about in great depth and detail for I think almost 2 hours, and then we had a follow-up webinar on that on Tuesday evening, and just to review where they are and how they are and what's their status. So as you can see, we did this is Friday, Thursday, Wednesday, Tuesday, Monday, right? So we did the first IMR on Monday here, then we did one more on Tuesday here, and this is where we are on Friday. And well, Sun Pharma, basically the common theme was all these stocks have run up, and they had run up till somewhere here, and some had run up a lot more, had broken out. And should we get in right now? Should we not get in right now? Should we wait for a correction, or should we, just say, okay, great, thank you, and get in? So different folks did different things, of course, but the net result is that the market's gone up from about 530 here to 570 here, 40 rupees, almost a good 8% in about 3-4 days. And any of you who did this through the derivative route has made a very good amount of money, and I hope you enjoyed the process and the whole move as it happened. We had a detailed breakdown of how these stocks behaved intraday, and we showed how in the morning some of them went up just a little bit, paused for more than an hour, and then towards the later part of the day they just kept rallying. So there was plenty of opportunity during the day itself, many hours as a matter of fact, to think, review, analyze, and take a very, very well thought out trade. So coming to Sun Pharma, they mentioned you could go spot, you could mention do futures, or you could do also options, naked options like some folks did, or bullish spread like some other folks did. All said and done, 580 or 600 is expected to be was the view then about being probably the resistance for the coming series. Well, I would like to maybe review that in the sense that the way it has gone up and showing tremendous strength and very, very good volumes, right? That maybe even the 600 could break in the coming 2 weeks. So we have about 1.5 weeks, like I said, to expiry. In that, definitely this could break 600, and if anybody wrote the 600's covered call, then you may want to review that. And who knows, maybe even 630 to 650 is becoming a distinct possibility in terms of how much it might move. So essentially, how you take advantage of this is still up to you. There can, of course, always be the correction and could come back to, let's say, 540 or something and then rally up. But like we mentioned, any and every correction on the pharma stocks right now is an opportunity to get in more, or if you've not gotten in, then get in fresh. So revising the targets upside, that's all, from 600 to 630, 640, and taking appropriate steps to take advantage of that. Coming to Dr. Reddy's, very, very nice. See how beautiful technical analysis can be. This downtrend line, which has been there from 2016. Did I change this Monday, Tuesday? I don't think so. This line was there and kept as it is, or even if I did, today it comes just there, hits the downtrend line, 2-year downtrend line, and shies back down. The issue with Dr. Reddy's on 1, 2, 3, 4 was it was here, Okay, that was the 11th, yes. And we were discussing whether it would be able to break out of these moving averages, and it did, and did that extremely, confidently. The Marubozu was very strong, bodied candles, nice consolidation here for the whole of May, and a break out of this sort of not a very big but a minor head and shoulder bottom, and then it has just rallied and gone way beyond the measuring implications. So this is showing tremendous strength, fantastic volumes, absolutely amazing volumes today, right? Sandeep, if you can go review the dashboard for this uh, Dr. Reddy's, you will see exactly what I'm talking about, right? So this is really fantastic stuff. And the next big trigger on Dr. Reddy's will be the breakout of this 2-year downtrend volume, right? Sorry, downtrend line, multi-year downtrend line. It could correct before that, right? That's something we can never be ruling out or complacent about, right? It could, and look at this, not of course at the same category, but a decent rally and then a big sharp correction in the next 1, 2, 3, 4, 5, 6, 7, 8 days, trading days. And then, who knows, 3, 4, 5 days correction, coming back to the trade war, which seems to have started off by Trump and China saying trade war has started. Who knows? This could all, come down 4, 5, 6%, and then consolidate for some time, take a breather, and zoom, you have them, really shoot off again. So this downtrend line being broken, 2,370, etc., being broken is a key level to watch out for the coming week. And when this goes, I don't think even 25 is going to be a resistance. I think 28 is what you should start looking at, especially if your view extends into next month. If we're on 15th of June, if you're extending your view into July, then you can definitely be looking at 2,800 sometime in July, if not in June. So wonderful move. And typically, there is no perfect answer to should I get in now after such a nice move or should I wait. You could do something like get in partly with not your entire capital for Dr. Reddy's. Maybe you put in 25 or 50%. And if it goes down, fine. And then you put in some more as it goes down. Or, I mean, it's up to you, your risk appetite. There's no perfect answer here. But all said and done, please remember that 2400 is a very key resistance. And once this breaks, then 2800, I think, is on the cards in the coming weeks. Cipla, just amazing, moves on Cipla. Fantastic volume again on Cipla. Today, I mean, overall the market was, very bearish, and the sector across sector was all in the red, except pharma. By large, the pharma was just, holding it was doing its own thing, basically, it was just doing its own thing. And what's key for Cipla is actually the 630, 625 level. 625, 630 breaks out, and Cipla is just going to probably shoot off all the way to 750. And this move, who knows? This is very close. In terms of price, that level is at 622. This closed at 611. We're talking about another 10 rupees, about 1.5% up, and if it clears that, then who knows? It's just going like a rocket, and you already have volumes terrifically building up. So another very nice long setup which is available. Of course, there's already a move that's happened. A correction could happen, but like I said, every pharma stock, the story is more or less exactly the same, very similar. You either get in and just hold on to the roller coaster ride, or if it comes down, then you just add more and hold on again for the roller coaster ride. Looking at Lupin, so this is hesitating right now. We talked about a nice bullish divergence. It has of course broken out. It's really not unlike all the other ones we saw with nice Marubozu, big candles, bodies. This one is just there for all Monday morning tops. It's gone to 1,000 rupees, just like that. It'll just shoot up and go off to 1,000 rupees on Monday morning. Can't rule that out at all. So this is something for you to really keep a keen eye on. If you feel that you missed out on the previous, jumping rabbits, then this is one jumping rabbit which is, just there poised to jump, perhaps. On the other hand, it could come back down. This would be the level to watch out for, 840, and if it comes there, please definitely pick it up. Right, 1000 first initial level. Looking at how the other stocks are just boom, boom, boom. Maybe 1200 also is coming, especially if your view is into the next month. Oro Pharma, so exactly the same situation, not broken out of a resistance, come 200-day moving average at 635. Ignore this red. It's a flat candle more or less today, right? But it rallied back. This is technical stuff. This is textbook technicals. Resistance there, double resistance, 200-day plus a multi-month, multi-year. Let's see, is it multi-month or multi-year? Multi-year. Well, sorry, zoomed out too much. Yes, it's still multi-year, right? So this is from 2016, 2 years, and if it zooms out, right now, just to point out, you have some very different setups in terms of, see, Oro Pharma coming out of a bottom, but which one is this? Right? Cipla not really having fallen down a lot. It's still there, and it could zoom out, and we'll have to just see if that it can do that. And if it can do that, then great. Otherwise, you know, the point I'm trying to make is some are coming out of great weakness. Some are, all set for really good strength. And actually, out of all of them, Cipla is the only one which did not correct the way all the other pharma stocks did, at least in the Nifty space. We're not talking about all the pharma, just some of them is what we are talking about. So, do you want to buy the end of weakness and the beginning of strength, or do you want to buy some pre-existing strength and then right? It's just philosophically different ways of approaching the uh, situation. Both are likely to make you profit, right? You could do some measurements in terms of what's the next big support resistance, how much upside in terms of percentage or downside in terms of percentage, and take a more considered or a more measured or more analytical decision when you have this sure feet of opportunity in across the sector, right? And maybe we'll do that. I don't know whether I'll have time this week. Eid is coming up. Tomorrow is Eid. So, by the way, happy Eid, everybody. And you could, maybe as part of the FNO discussions, we could do a deeper discussion in terms of potential upsides, downsides, put percentages to it. By the way, do that as an exercise, and maybe we can review it in a far detailed FNO webinar and look at what is technically, analytically, mathematically a better setup. So that's it about pharma. Now, I want to look at one more which we did not address before moving on, which is Reliance. Right? Reliance is breaking out and making a new life high. There is no doubt about it. It did this massive move in 2017, where it basically went from 515, or if you prefer, 580, and grew all the way to 950, right? And then from October last year to now, June, so that's 1, 2, 3, 6, 9 months, right? It's consolidated. Now it is breaking out. And Reliance made a new life high today, closed above 1000 rupees yesterday also. Yesterday it closed at 1007, and today it closed at 1014. And again, on really good volume. So Reliance is definitely now in open sky territory, as we say. You could buy the 1000 call, you could buy the 1050 call, you could buy the 1100 call. Just don't do one thing, don't short it, right? Don't short it. Take every bullish call you can find, and just keep holding on to it, or buy Reliance spot or buy Reliance futures, whatever you prefer. In terms of targets, well, at the very least, right now we're looking at this rectangular consolidation, say from 960 to what is this, 860, 100 rupees. So 100 rupees plus 960, 1060 is very likely, and I think it's going to definitely go way beyond this 1060 levels, right? So this is where Reliance definitely is, and we just have to wait and watch for how it is going to pan out, right? So after a very long, sort of almost impatient wait, it's here in making new life highs. While, by the way, the rest of the market is sort of going to sleep, getting into a downtrend, and there's this Reliance which is really, really, um, um, holding its own space, as it were. And we mentioned this last year, sometime a year and a half back. We did a very deep review of Reliance from a fundamental business and technical perspective, and was saying, Reliance could be something which is there to hold for many months, maybe even a few years going forward at that time. And only 1 year out of the few years is over. So anybody with a very nice long-term, view should really think about it and consider how you want to participate in the ongoing long-term move, right? So be very clear, both trading and investment opportunities available in Reliance right now. It, of course, will get affected if the overall market does some correction, but hey, that's the time to buy more, right? All right. So we didn't discuss Reliance last time, and I thought it's important to do that this time. Next, I will just look at some metal stocks because that's where we found some really good shorts. Correct? If I'm wrong, if I'm right, please correct me if there's anything I'm missing, and then maybe that'll be it. That'll be it for this IMR. Right. So there is Hindalco, right? And if I just go into sector indices, BSC metal. Yes, so this is what we were saying. Metal, big head and shoulder top, right? Almost 1 year, big time implication, almost 30% downside possible. So that's why we are looking at the metal stocks within the Nifty. Of course, these are not the entire metal list, just the most important ones, the large cap ones. All right. So yeah, where is it? Yeah. Yes. Okay. So Hindalco first has actually, made new life highs in the recent past, as you can see. Right. Let me take to weekly, and not really a life high that it could sustain. So 2011 life high was there, and then it sort of just went to about 280 and then cooled off, and we now definitely have a downtrend of sorts there. That's to be kept in mind, and doing a sideways move but likely to move down. In terms of indicators, you can see volume has more or less, again remember this weekly chart, come down quite drastically over the last almost 2 months. And going back to daily, you can see again the low volume which is there, sideways move for May, June, and I think this 260 levels is a very strong resistance at this point, right? So 260, and then on the downside about 220, 210 could be a very strong support, or well, I mean it's a strong support, and once it breaks, then 200 and 190 become very quick targets. And remember, when stocks fall, they fall much faster than they rise. So you could suddenly see a move down. So as a matter of fact, today's move in terms of percentage is 3% down move. Okay, that's quite big. I mean, for a Nifty stock, a 3% down move is something which is substantial. It's not something which is small, and it's come there after 1, 2, 3, 4, 5, almost 2 weeks of small teeny weeny candles, as you can see. Volume is not compelling, but if this 200-day moving average breaks, then don't be surprised to see 3-4% down moves 3-4 days in a row. So that means 10% down in 1 week, for all you know, and suddenly the stock will be at 200. So watch this space. 250, I think, very good resistance. You could put a stop loss at 250, 255. As a matter of fact, if it comes to 250, 255, you should short more. And then if it goes maybe beyond 260, 262, is when you get out of your shorts, right? So whether you do this with puts or futures, that's really up to you. Maybe we'll review this in strategies, but that's the view on Hindalco for now. Tata Steel clearly, below the long-term moving averages. Again, you can see how the long-term moving averages are turning down themselves. Now, did not manage to come back to the 2007 peak. right? So a relatively strong underperformer, right? Very strong underperformer, that's for sure. The entire metal space, not just um, Tata Steel. And this downtrend line should now be kept in mind. It's just a matter of time before 540 breaks, and then 500 is on the cards, right? So again, how do you want to execute it? That you have to think about your own personal circumstances and decide. You definitely have around 290, 600 as a strong resistance, and then once it goes down, it's going down quick. Then Coal India, all right, leave that now. Okay, unfortunately, not many in this. I'll just do one thing, 1 second. Okay, let's bring in the NSE and then we will do a more comprehensive review. Stockwatch, NSE, where is metal? Right, so we did at Hindalco, we looked at Tata Steel. There's so many other stocks which are not obviously covered in this. Let's look at what else is sale, Nalco. Okay, so they also have to be, of course, in the FNO list. There we go. Sale. Okay, so sale has actually been going up. So this is definitely something which is doing something else on its own. And you can see it's actually come off quite some substantial lows, multi-year lows, 2004 onwards lows, 2016, 17. And if you zoom into the more recent picture from the last 7-8 months, you can see a dramatic increase in the activity after almost 2 years of a lull. You can see dramatic increase in activity, and more or less all this activity I think is on the upside in terms of accumulation and buying, right? So looking at the OBV and PBT, I think they very much confirm strong buying interest. So I would not want to short sale at all. As a matter of fact, it might be a good long uh, contrarian play to the overall metal space, good support, a move, consolidation, a small flag of sorts. So if anybody is even looking at this with an academic interest, and there you have it. It's a really uptrend flag. I would say the up move started here at about 75 all the way to 90. That's big. 75 to 90, 15 rupees. So let's say it breaks out from even 85 to 1500 rupees is the next target. 100 psychological mark. Definitely keep a watch on it, right? I would, at least from an academic perspective, strongly recommend that you observe what happens to this stock and learn, right? So shouldn't be that green, it should be okay. Okay, 100 very likely coming. So watch for what it's going to do. Flagged. So it's not to be shorted, it's to be gone long at. Okay, Hindalco we discussed. Hindustan Zinc. Okay, something wrong with my data. Looks like from 2003. I'll have a review of that later. Okay, so Hindustan Zinc clearly new life high. The only challenge is it's all doing some sort of a sideways drama and really not convincing about anything. I would really not want to deal with Hindustan Zinc. It's a sort of sideways to iffy move. It could break out of this and move up, or it could break down of this. Too much if this, if that. So forget about it. VEDL. Oh well, this is the one maybe we should have looked at some time back, right? Because clearly VEDL is doing a rounding top, right? So I hope you can see it. There's a clear rounding top, and it's already broken the internal neckline. Maybe it is going to break the external neckline. So this was your rounding top. It's sort of a complex rounding top, right? Let me just make this smaller. Let me put a neckline. There you go, right? Okay, there you go with the neckline. You can see the clear breakdown that happened on VEDL, right? And you can see that it all happened on good volumes too. What more evidence can you ask for? You can't ask for any more evidence, all right? And this down move, one, two, right? I don't think it's over. However, it could rally back up maybe all the way to 265, 260, 255, right? There is a small possibility because you're getting a bullish divergence, right? Clearly, there's a pretty strong bullish divergence on top of that. So I would not short this in a hurry, right? There's clearly a bullish divergence there. You could see a relief rally up, and that will, however, probably be part of a ongoing larger downtrend. Or what you have to look at is this, right? That is the line you want to watch. Too much yellow actually on this chart, but well, sometimes it does get cluttered, unfortunately. Or if I even do this, just trying to get a best fit line. All right. Okay. So, there's also this falling wedge, which we say if it breaks out. So it could break out. So there is a reason to be cautious with any short here, right? But if it does break out, then at higher level, look at going short on VEDL. I think that is there. On the other hand, it could just go up to maybe 250. Again, 250 nice psychological round number, and then could crack back, right? I don't think options liquidity is really something to look at in this. Well, just very quickly, let's have a look at that. Live data, equity derivatives, VEDL, sorry. Not bad actually. 1,300 trades, 675 trades. On this side, 2,000 trades, 165.24. So you have to be very selective about the strike price that you look at. And see, what's very interesting is notice 410 to 170 is the strike price, very wide. Basically, the lower and lower strike price would have been introduced as the stock started to go sideways or trended down, as you can see. So a few, maybe 2 months back, 3 months back, 350, 360, 330 would have been out of money, would have been traded pretty actively. And then as the stock went down, they would have to decrease the strike prices, that are lower strike prices would have to become available, right? So clearly you can see, and you can see very interestingly, I hope some of you have, I'm sure, noticed remarkable decrease in the OIs, put OIs, right? So the supports are clearly getting weaker. There is for now 230 build up. I would not give too much, importance to this, but whether it is at the money, even in the out of the money OIs, okay, out of the money puts are getting weaker. Clearly, an excellent thing about support, getting weaker or disappearing in the lower places, and tremendous increase, not tremendous, that's a too dramatic a way to put it, increase in the resistances, nice strong build up in the higher strike price or out of the money call strike. So very compelling evidence on also on the option chain data to show that the option participants are bearish very clearly. So this is a good one to track. So looks like going up. I'll review that statement up to 265, 270 right now. I think it's very unlikely. 250, 255 tops, and then probably a breakdown from that. Having said that, the only small concern is that falling wedge. But somehow this falling wedge is a little too early in the downtrend to happen. If you see it after an extended downtrend, then worthwhile. So maybe some consolidation up move, but a beautiful shot in the making, right? And that's it. We're going to stop here. Some really nice setups. So except for sale, which was forgot Jindal Steel and JSW Steel. Tata Steel we did. Okay, this is interesting. JSW Steel just going up, 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 up. So a very fragmented metal space, right? A very fragmented metal space, really good, strong up moves on Jindal, for almost 2 years right now. This is very interesting, and this is especially after breaking out of a multi-year top. See, this is what happens. It was 140, it is 320, more than doubled in 2 years, and yes. All right, so bit of a concern now. Okay, not too much, but still, you are getting a divergence for sure, both on the weekly and definitely on the daily chart. So the weekly divergence, I would say, a little bit weak, but the daily divergence, so at some point, maybe a top is coming, right? Though this is not a compelling shot, there is some weakness that has built up yesterday, today, maybe all the way down to 325 or 310. But again, no need to look at this as there's a good strong uptrend. You can get stopped out, so leave it. And Jindal Steel, on the other hand, however, yes, still a very weak performer, and that's a multi-year resistance. It had gone to 2008 and even 2014, and from here it has to decide what to do. Looks like it'll break down. Okay, that's the general view, and if it does, then this is probably a good short to look at, right? And as to 210 being the immediate support, and after that all the way to 170 is definitely a distinct possibility. The best thing would be to wait and watch for a proper confirmation, either way, breakout or breakdown. Put alerts for around 225 and also at around 250, 260, so that you catch which side this moves. Any of you who don't have the time to track this, you could go for a long strangle, buy the 250 call and buy the 230 put or 220 put, right? And hopefully, if the crack happens, then you'll make money and the call cost will be recovered. All right. So except for sale, which is clearly a long, and also JSW Steel, which should not be shorted, everything else, right? Either they're probably setting up for a short, uh, and yes, probably setting up for a short and or already in a nice downtrend. In terms of, I forgot to mention this, in terms of a much bigger rounding top, you could draw one from here. Okay, you could draw one from here to where it is right now, and this is your big neckline. If you look at this, the measuring implication from about 340 to 240, 100 rupees, or 240 could become 140 all the way here. Sounds implausible, but if any of you attended EQNS and you remember the SBI discussion we had in EQNS of the 2008 crash, and you're saying the biggest bank in India is going to become one-fourth of what it was, well, it did. So why can't this become half of what it is or less? So VEDL, and remember, they have all those problems in Tamil Nadu with their plant shut, and who knows what recovery may or may not happen, and any more trouble that might be in the working for them. So that's it. So we've got some really nice sweet shots, some wonderful longs on the call side, and then on the pharma side, and there are plenty more opportunities if you want to really go through all these stocks. The IT space is another space to look at. Let's very quickly look at Nifty IT, and well, what a coincidence that Vidya joins us as we are just looking at IT. Hi Vidya, long time. And IT, like I already mentioned, making life highs. TCS making a life high today. This was the consolidation we spoke about for May, June, now breaking out. And ignore this. If I zoom in, that's good volumes today, right? Really, really good volumes today. So do you want to buy spot, futures, calls? That's really up to you. But clearly, good volumes. Too long to be called a flag, but I think the next target for TCS is 2,000 rupees, just a psychological number. Most likely, it will go beyond that, right? So TCS, Infi made a new life high, right? And we'll look at this, 2 days of sort of 3 days of, not in one day, it is up today up 3.4%. If anybody knows any particular news, well, and it is again at a life high, again, big volumes. You have to ignore this one, right? So, and here's the thing, Infi is actually coming out of a big rounding base on the top, okay, not at the bottom. So this is a big consolidation of 2 years to 2016, 2017. And the depth of this is from 1,200 to about 940, okay, even 920. Uh, so 1,000 rupees, sorry, what am I saying? 300 rupees. Yes, 200 rupees. Sorry, brain's a little soft today. 200 rupees is a further upside possible. So are we talking about 1,500 rupees on Infi in the coming weeks and months, or let's say by the end of this year, right? I think that is definitely on the cards, right? 1,500 on Infi, especially with volumes like this, is definitely possible. Wipro, that's one which is going the other way around totally, but taking support. And for now, I would just leave it until you're one of those guys who likes to, um, latch on to underdogs, and you find it appealing to catch underdogs. Then this could be one of those, right? By no means a underdog Wipro, but underdog in terms of performance, all right, the stock price. So not compelled. What I see on Infi and TCS is definitely a better picture. HCL Tech also, sort of on its way back up, and just a matter of time, breaks 950, then all the way to 1,000 and higher. Tech Mahindra struggling as it reaches that life high. You don't have the strong Marubozu type things as you saw in the other pharma stocks. This is definitely struggling, and the volumes are there, but I won't say they're convincing right now. And I think it's gone into a sort of wait and watch. And for all you know, it'll be one of those days like Infi was today, where you'll suddenly see a 3, 4, 5% move on good volumes, break the life high, and then participants jump in. But when will that happen? Well, that's just a matter of conjecture. It could happen anytime, soon, late, I don't know. So, well, we'll just wait and wait for it to happen. So, very quickly, TCS, good setup. Infi, good setup. Everything else is a little bit not so great. HCL Tech also, if you want. So, thank you. Coming to the end of today's IMR. So, like I said, found some really juicy setups both on the long and the short side. It's actually not common to come across so many opportunities at one shot, right? Those of you who've been in the markets a long time, you would have also experienced, and even the IMRs is sometimes just dry and boring. Today was also dry and boring, except that we found opportunities. You will be dry and boring and no opportunity, right? It just goes on. So that's how the markets are. Lots of action sometimes, and lots of opportunity sometimes nothing. So this is the time to be, I think, really focused. And the other lesson, this time the market is very stock specific, sector specific and stock specific. You cannot just put your money in a diversified fund and expect to make money. It's not going to happen. But if you pick up these stocks like we discussed, and what's very nice about it, on top of all this, we are finding all these amazing opportunities. I think at least half or more of the Nifty stocks have either a long or a short, compelling long or a compelling short, right? You don't come across that many. Those of you who've been regular on the India market reviews or any of the other discussions, or you do your own analysis for that matter, I'm sure hopefully you'll agree, right? So I know also one thing, that all of us have very limited capital. You have to think about how to deploy it. And well, I will leave that to you, and I leave that to you over the weekend to figure out before Monday morning markets open, to decide how you want to deploy the limited capital that all of us have in the many opportunities that are there. So, like I mentioned a little bit earlier, the best thing to do, or one of the good things to do for the coming weekend, is for you to think about looking at each of these opportunities and doing not lot, but some more analysis on it in terms of how much, in terms of percentage upside downside is available. Are you looking at a long shot? Doing a more clear mathematical. So some stocks might be giving you a 10-20% upside. Some might be giving you just a 5% upside. Some might be giving you 20% downside. Some might be giving you only a 5% downside. So obviously, whatever is giving you more upside, then tie that with probability, your risk appetite. If you're doing options, liquidity issues, and well, take your pick, right? So it is, how do you say, in a different context, a buyer's market. You have plenty of choice, right? Long, short, or even sideways. Nifty strangles sideways, bank Nifty strangles sideways. It's a beautiful opportunity to learn and get your practical stuff really rock solid, right? And this will continue, I think, for the next few weeks at least. So please take the fullest advantage of this, at least from an academic perspective, and hopefully from a financial perspective, and make a lot more money that hopefully you can do, right? So great. You know how to get in touch. Love to get your feedback, any inputs. Thank you so much. Have a great weekend, and I'll see you in the next IMR. And Eid Mubarak. Good night.